Okay, stock Northrop Grumman, really important stock, really exciting stock. Let's talk about it really quickly. Let's look at some technicals. If we look at the 5-year, you can see that there's this triangle that was forming. It was using 290, as you can see on the right. It was bouncing down at that 290 and then going up and having lower highs. And when we zoom in at this 1 year, you can see there's this red triangle. I don't know if you can see it, where it was bouncing down at that 290, lower highs. That's kind of when I bought some contracts, some calls, and some puts. And so as long as it moved strongly in one direction. But I just wanted to let you know that technically my calls are in the money right now. They're going to expire soon. I just want to make you aware. I don't think I'm biased, but I want you to be aware of my position. Ethically speaking, you should know. Nevertheless, this is for educational purpose, entertainment purposes only, not an expert at anything. But, there's a lot of room for this stock to move. You can see on the far right, it had a huge jump over there in the green to 352, and that's because they beat earnings. People were expecting them to miss earnings. Well, they beat earnings. If you look in the 10K, you can see that in terms of the return, you can see that the industry and Northrop Grumman, they kind of go together. That gray triangle is the industry, blue circles Northrop Grumman. They kind of work together, which is pretty interesting. Usually ahead of the S&P. Now they're lagging the S&P. Hopefully they'll catch up. Maybe that's a bullish argument. But let's look at the business. So they have 4 sectors, I suppose, although I believe they've sold mission systems, so maybe 3 sectors now. We'll talk about that. But the aeronautics is the unmanned aerial vehicles, and the manned aircraft like the B-2 bomber, things like that, defensive systems. So they have a lot of missile systems for defense and mission readiness. Not entirely clear what that is, but pretty much it involves support, let's say, for software, weapon systems, aircrafts, things like that. But it also might involve IT infrastructure, which, that kind of looks similar to mission systems, which cyber and intelligent mission solutions, but there's a lot of interplay between these sectors, so it's not any hard lines. This is just, I guess, a way that they organize things. And the space system, which is kind of new and really important to talk about, at least I think so. Just to give you an idea of why I get confused about these sectors. So you can see it's defense systems, but they mention munition and missiles and precision strike weapons. Well, it doesn't sound like defense. Well, maybe it's this counter-rocket artillery and mortar. So these are missiles for countering. I don't really know, because there's obviously a little bit of secrecy and a little bit of veiled, because they're not going to talk about all of their military systems, right? The government doesn't want them to explain and detail what's going on. So if you don't like that, it makes me feel a little bit uncomfortable when it comes to a stock not knowing what's going on and kind of this veil. Important to know, though, that you're not going to know everything that's happening in this company like you would a different company. If you're comfortable with that, great. Consumer concentration, the U.S. government, makes sense. And in terms of competitive conditions, I thought this was interesting, that it's normal to become a subcontractor. Even if you lose the contract, to still become a subcontractor to the primary contracting company happens a lot. Makes sense why, for example, Northrop Grumman, in terms of return, match the industry. That there's a lot of, as much as competition to win contracts, they still will share that contract often. Well, I don't know if it's often, but it's certainly not unusual. Okay, so let's talk about the risks that they mention, and I'm just going to highlight a few that I thought were interesting. We already mentioned one, heavily dependent on a single customer, the U.S. government. Well, it looks like the Biden administration is going to increase or at least continue with defense spending. We'll have to see what happens, but haven't heard anything about that being cut, that's for certain, and it seems like the consensus is that it will continue. Okay, now this I thought was interesting. They mentioned fixed price contracts, and we'll come back to this. They have a financial risk associated with them. And environmental matters, they mention a risk here. And this is why it's important to read everything. But if you're going to skim at least the first sentence of every paragraph and pay attention. So when you see we are engaged in remediation, that should be a red flag. And when you see substantial remediation, that should be an even bigger red flag. And so obviously there's some issue in Bethpage, New York that they caused, and they're going to have to pay for it. Hopefully substantial remediation is not substantial for the size of the company. It's just a substantial amount for environmental matters. We'll have to see, but something to keep in mind. Okay, they mentioned that they could be affected by material and component availability and pricing. Well, silicon chip shortage, they were invited to the White House to discuss with other companies. That might affect how much it costs to develop the things. And like we mentioned before, some contracts, they get a fixed cost. So even if their supplies go up in price, they can't pass that on to the consumer. So something to consider with commodities going up, with silicon chip shortages. Maybe this is just temporary. Like I said, consider it. I thought this was also interesting in that they mentioned that they have certain contracts, especially in the space, where they have recovery fees. So if something goes bad or they're not able to hit a target, there's fees associated with that. Something to keep in mind, like I said. Okay, let's look at the financials now. So we have great financials in terms of sales, $3 billion each year growing. Yet the earnings, 2018, 3.2, 2019 fell $1 billion. 2020, almost back up to that 3.2 previously. So what exactly is going on? We'll have to talk about that. At the bottom, you can see total backlog. That's been growing. That's good. That means those are that gives Northrop Grumman room to grow. That backlog is showing, yes, they have contracts and more contracts that people want each and every year. So that, to me, is a positive sign. Now, they mentioned that they sold their IT and mission support service business. So I don't know if it was the whole sector, if part of it. They mentioned which parts. It's unclear to me. Like I said, there's a little bit of a veil. I don't know all the details, but it was for $3.4 billion in cash. So hopefully that was good. Okay, now we mentioned these revenue numbers, these sales that were going up $3 billion, and yet the earnings were having this weird dance. Well, we can see over here the market-to-market pension expense having a similar dance, and so that seems to be the major hit, at least I think. So you see 2018 was only 700 million, 2019 went up $1 billion, right? Remember that difference in net earnings. And then in 2020 it came down almost $1 billion, right? It's really matching that net earnings. So that pension expense is going to be really important. Now, this is why it's really important to read the 10K, because people were mentioning it's going to go up even higher, and of course it didn't. So what's going on? Well, later on in the 10K, you see the same number of the expense, and you see the numbers dancing around in terms of what's going on, and they give you a note here, which is really important. They're saying that the $1 billion difference was primarily because there was a 71 basis point decrease in the discount rate. What's the discount rate? Well, it's how much they have to pay in to keep the pension fund growing. So they didn't have to grow it as much. Why? I'm not an expert. I have no idea. But I think it's tied to the interest rate. And so we had low interest rates in 2020. And so the discount rate that probably reflects that was low. And so they have to pay a lot less into the pension. You can look up pension discount curves. At least that's what I think you could do in the future. So just Google it. You'll find the company. They might have a pension curve. And so let's say you find the discount rate on it. See, 2020, it was very low, just low twos, 2%. And what's interesting is already in the beginning of 2021, these first three columns, you see it's now starting creeping up. 2.6, 2.86, 3.09. Is that going to keep going up? Is the pension expense going to be even bigger next year? Well, what was it in 2019 if we're going to use this curve? Because this curve is not going to match the Northrop Grumman curve, presumably, but you'll kind of see the same trend maybe. So 2019, you see at the beginning on the far right, it was around 4. So that means there's a lot of room before you're going to match that 2019 $1.8 billion expense. Well, on the left side, 2019, you see it was down at 3. So maybe 3.5. So 2021 might be matching that. We're seeing interest rates going up. Something to really, really consider about this company. It might surprise people. The pension expense was just a one-time $1.8 billion thing. It's coming down. They might be surprised. It might pop right back up. Okay, now let's look at the products and services. I think this is a really important table. You should kind of look at it. It was really confusing, though. It was really hard to highlight. Confusing visually. What's important to look at? Well, you can look at the totals and at the very least. And pretty much when you're looking at it, you want to see 2020, there was a sale number. So, for example, let's look at aeronautics. $12.1 billion in sales. Operating costs and expenses was around $11 billion. And then you look at 2019, that was $11 billion in sales. So there's $1 billion difference. So in 2020, it went up $1 billion. But if you look at operating expenses, that also went up $1 billion. And so it's kind of a wash. How much of a difference was there? They made so much more money in sales, a whole $1 billion, but they didn't actually profit from it because the operating expenses increased. So that's why I think this is a really important chart to look at. I thought that the bigger operating income increase compared to sales, although it wasn't huge, was in the space system. But important to note, right? You had a $1.3 billion increase in sales, and you at least got a $100 million increase in operating income, right? So that $1.3 billion you can see over here, the operating income increased $100 million. So that's not a huge increase, sadly. Only $100 million increase in operating income. Well, they might still be growing space systems, but what is important to mention is it was at least an increase, right? We just saw aeronautics had a $1 billion increase, and yet they were at least, I don't know, maybe they had a few $1 million increase in terms of operating income. I didn't really look too carefully. It just wasn't big enough for me to consider. But at least this is $100 million. The operating income is steadily growing compared to 2018. So that's pretty good. Sadly, it's a little bit scary for me that they can increase sales so much and yet operating income doesn't increase or minutely increase. So a little bit, I wouldn't say a red flag, but maybe a warning flag. Okay, in terms of backlog, I thought this was really interesting. So huge increase of backlog. Sadly, a major portion of that is unfunded. Unfunded means, people kind of have this order and we want this order, but we might not actually go follow through with it. And a major portion of the total backlog increase compared to the previous year is in space. And this is really important, right? So it's 35 billion from 16 billion. That's huge. That means space is really ready to increase and grow because look at all these contracts. And like we said, those huge numbers in terms of sales, well, at least the space systems has been growing operating income. So, good news on top of good news. The sad part is a major increase is unfunded. That means that nothing might ever come of it. So, for example, Amazon had a contract, I don't remember exactly what it was, a mission to the moon, maybe, manned mission to the moon, and they lost it to SpaceX. Elon Musk won that contract, and Amazon or Jeff Bezos, I don't know exactly what his company was called, but he lost it, and Jeff Bezos had subcontracted with Northrop Grumman. So are those part of the unfunded? I don't know, maybe those were already wiped off before they compiled this report. I'm guessing not, because this is for 2020, and I think that news was too recent. So how much of that was the unfunded? And that's what I mean. These things might not ever materialize. But my point is, at least you're seeing the growth in the sector, or the potential growth in the sector, I should say. There's going to be a lot of competition because it looks like SpaceX is not subcontracting. Nevertheless, Jeff Bezos is fighting it. I don't know, this is a little bit of a detailed, nuanced thing, but like I said, these are the things you have to know about. And that's really, really important from my perspective. In terms of the backlog in all the other areas, those are kind of normal. They're a little bit down. I don't know, it doesn't concern me too much. Not huge numbers as far as I can tell. And like we saw before, even though they had those changes in the numbers in terms of going up in sales or going down in sales in previous years, the operating income was the same. It's really the space systems that I'm really interested in, I think, personally. And someone said, Northrop Grumman's so interesting about the space, and I kind of laughed. I'm like, well, they're not space. That's not what they do. But in the past few years, they've really been focusing and really growing. And now that you look at the 10K, you kind of understand it. And so as much as I kind of laughed when I heard that, I mean, I didn't laugh out loud. I just laughed inside my head. I don't want to be insulting or anything. But when you look at the 10K, okay, now it makes sense. Now, they couldn't explain that to me because they didn't explain it to me. Maybe they had read the 10K. I have no idea. But they certainly didn't explain it to me. Now it makes a little bit more sense how interesting that kind of play and movement of the company really is. Okay, in terms of operating cash flow, you can see that's growing. It kind of stalled in 2020. But once again, retiree benefits, and that's excluding the market-to-market expense. So I don't know, with these pension plans and retirement benefits, I don't know what's going on with this company, but it seems to be impacting the company. And it's the most mundane kind of detail, but something you really need to know about if you're going to invest in this company. Okay, and free cash flow, that seems to be growing year on year, so that's a nice positive. In terms of Northrop Grumman, in terms of their contract, I said we talk about this. You can see when you look at the total, the cost type of contracts, 50%, fixed is 50%. So cost will change, the contract will change, let's say based off of Northrop Grumman's costs, whereas fixed will not. And there's a lot more risk there. So space, which is this growing area, they have a lot more cost type contracts. So that will really protect them in that growing area. Of course, it might make them a little bit less competitive because they're going to pass those costs on to the client. Now, in terms of geographic sales, I thought this was a little bit interesting, even though it's mostly the US. You can see the partition over here. And if we look at the defense systems, all other has 9%, so 600 million is going to the Middle East. That one tells you, if you look in the 10K, it's mostly the Middle East. So I thought that was kind of interesting. And yet, when you look at mission systems, that's mostly Europe and Asia Pacific. I don't know if that has to do with Taiwan, Asia Pacific. Not entirely sure. Once again, I don't think they give that kind of information out. But Europe is a central area. NATO and the U.S. military has a lot of bases in Europe. So it makes sense, I suppose, that mission systems are more concentrated over there. And so they have an in if they want to put in defense systems in Europe. Well, they already have contacts doing, $1 billion worth. Do I think that's going to happen? No. It's just something to think about, those types of synergies that we've talked about before in terms of networking, business networking. I don't know. Something to consider. But nice to know that they kind of have plays in different geographical areas. I'm not wishing for war, but if tensions escalate, hopefully no war, no conflicts actually happen. But if tensions escalate, some of these countries have to invest more. Well, no matter where they're escalating, whether it's on Russia and Eastern Europe, or whether it's in Taiwan or other areas like the Middle East, they have some sort of ability to help those areas. Let's call it that way. Okay, just looking at some more longer term visual charts, you can see revenues really been growing for Northrop Grumman, really amazing for the past 10 years, except like we saw kind of before, cost of goods is also growing. So when you look at operating income, that's growing, which is nice, but not by leaps and bounds comparatively, So it was kind of stagnant until 2018, which I think is when they really started their space sector. Certainly they bought a company and they grew their operating income by 600 million and now by 800 million in 2020. So that's kind of nice. In terms of goodwill and intangible assets, 2018 was that purchase. I don't know if it was specifically only that company or multiple companies, but it's been going down. I don't really care about write-offs personally. Usually people care because when you write a company off, it means you paid a lot of money for that company and they're not delivering on their goodwill and their name. And so you pretty much overpaid. So that's kind of a red flag, I suppose, and people might be bothered by that. But we're seeing revenue growing, operating income growing, and so I'm not too worried about this. But something to be considerate of. And sometimes companies will write off the goodwill if they have just a bad quarter or whatever it might be. They'll really write it off as far as they can, so the next quarter they don't get hit by it. I don't know. These are things personally I'm not going to really worry about it. Cash flow kind of growing, which is nice to know. Operating margin not growing, but it has room to grow, which is nice to know. So we saw those billions in terms of sales increase, and yet we saw cost of goods going up, and so they had the same profit. Well, also not good to know that the operating margin, assuming I'm understanding this right, is really decreasing. But on the bright side, hopefully it'll have room to increase, and so they'll be able to get more operating income, and they'll be able to grow their net earnings, hopefully, if they can get a handle on that. I suppose that's a big if. Net income, kind of stagnant. It was kind of jumped up in 2018, and now it's jumping up again, hopefully because of space and because of their growing. Hopefully they'll be able to, take those sales, take those revenues, and really increase their net income. In terms of the PE ratio, price to earnings, you can kind of see for the past few years it's kind of bounced around. Now, personally, I think it's on the low side. Why? Historically, it's on the high side, I suppose. But I think it's on the low side because with interest rates so low, A lot of companies have had much higher PE ratios, and yet Northrop Grumman is not. So I think as much as it's high, I don't think it's a disqualifying factor for the price going up. It's not great that it's high though, but it's just not a red flag to me. I guess that's the way I would look at it. In terms of dividends, you can see the middle part of this chart, the dividends steadily growing. The yield, not so much, but that's just because the price is going up. So if you were really holding this stock for a long time, you're a dividend investor, I would say that that's a really positive sign. If you invested 10 years ago, you would have great dividends, I'm sure. Okay, just something to think about. I wouldn't really worry or think about it too much myself, but if you're focused on dividends, I thought I'd mention. Conclusion. So I think there's a lot of room for this company to grow. We're seeing the backlogs grow. We're seeing space being this new sector. Really, really growing. Really, really positive in my opinion. And sadly, with all the tension in the world, in terms of military tension and skirmishes and things like that, it's a positive thing for Northrop Grumman, I suppose. And so there's a lot of positives to this company. The biggest con, and it is a major con, is interest rates. From my perspective, you see them going up. We're seeing that pension curve going up. Are we going to come back into that $1.8 billion? And, it really blew up the stock price because it beat earnings, and people thought it was going to miss earnings. Well, now that it's beat earnings, it's kind of set that bar higher for the next earnings. So as on one hand, I'm kind of considering Northrop Grumman on a general upward trajectory from that 290 baseline, but now we've moved up. And it still could have room to grow. My problem is what's going to happen with that interest rate. And so if I was investing in this company, it might be a little bit more short term on the positive side. Sadly, it's really moved positive really fast. But when I say positive side in the short term, I don't mean like the next week or the next 2 weeks. I think the next 3-6 months it'll be on a general upward trajectory. I think there's a good chance it'll come back down just because it's moved so fast in the positive direction. I could be very wrong about that. But like I said, so it's moving very positive. Just the general gist of the country seems generally positive. However, all these retirement expenses are such a big red flag. And so if I was coming close to the next earnings and things were moving positive and I had some money in this company, I would start paying attention and looking at that curve. And that would be, I assume it'll be up, and it'll be a big red flag to try and pull out. And in fact, personally, if I see that this company, and this is probably the more likely play I would have in terms of options. Once again, not advice. But if I see this company moving steadily up, especially before next earnings, well, I'm going to start thinking about what's happening to interest rates, what's going to happen to that expense, because I might be able to predict that they're going to have a horrible miss on earnings, especially if that that bar has been set high. People are expecting an earnings beat. They just had an earnings beat. The estimate was higher. Things are looking so good, and yet I know the pensions expenses are going to be huge because interest rates soared. Well, I'm going to bet against the company with some puts. I guess that's kind of my particular opinion. It really, I suppose, is going to depend on two things. What do you think is going to grow more? These kind of industries or the interest rate? And I'm really nervous about the interest rate. We've seen it grow quite a bit. It's slowed down. It's come down. We'll have to revisit that. I thought it was going to grow even higher. The Federal Reserve has mentioned that they might grow their interest rate to stop inflation. They don't think there's going to be inflation, but they might have to. Well, we're going to get a lot of those signals as it's going to come. So my personal perspective is I'm not going to invest. I do think that there's a lot of amazing bullish news on this company. I'm not going to invest. Why? Well, just like I said. And so just like I said about the pension stuff and the interest rates. And we'll get a much, much better clue as we come. And so right now I'm kind of in a wait and see. I don't think that it's as much as there's, if it wasn't for this pension, I'd be way more bullish. I'd be way more excited. But with this pension stuff, I just think it's going to upset a lot of investors. And so even if you, in the short term, get some positives, those could just get wiped out by a miss on earnings because of these types of pension issues that people think, oh, it's just a one-time $1.8 billion thing. Well, surprise, it might not be. And especially with the workforce really increasing with this space sector being bought, and in 2018 I noticed a lot more employees. So this might become, sadly, a serious expense that has to be figured out by Northrop Grumman. Either they're going to have to grow, or they're going to have to figure out how to deal with this issue. Hopefully it's not with laying off employees. I don't want that, but I don't know. Maybe some deal with the workers. I'm not entirely sure. But like I said, really positive things. You just gotta, for me, it's a wait and see because of this expense, sadly. But there's a big part of me that thinks, that this sector maybe has lagged the market a little bit and has a lot of room to grow. And so I don't know what to tell you. I had calls. I expected it to grow, or at least I expected it to move in either direction strongly. That was, I guess, the more important point. And are we coming back to 290? I don't know. I really, really don't know. And what's going to happen with the interest rates? So this is, for me, a little bit of a wait and see. I have a weird feeling like it's going to move up. Just a sense that it's going to move up generally. It's going to maybe retrace a little bit, but it's going to move up generally. And I have a weird feeling by next earnings, once again, pay attention to that yield curve, but people might be upset by that pension expense. And that's what I would kind of... those are the things that I would really keep an eye on. The space side of things, how much are they really growing contracts in space? They just got awarded some ICBM defense contract. I'm less concerned about that because I don't see the operating margin. I don't see the profits coming from that side so much. Maybe I'm wrong about that. I'm more interested in the space kind of side, and I thought that was kind of a joke originally, but it's making a lot of sense to me now. So that's my opinion. Please let me know what you think. Comment, like, subscribe. I really tried to go through this 10K a lot quicker. 10K, I think, on this company was maybe a little bit shorter because they couldn't talk as much about some of the details, but it was really well organized, a lot easier to do. It took me a long time to research this and re-record videos because I made, I don't know, just mistakes. So really appreciate the likes, the comments, and no one was commenting on Northrop Grumman. It made no sense to me, so I just decided to comment on it myself. And hopefully we'll get some more videos, especially with all these earnings reports and everything going on. I'll get back into Tesla and get back into some of these really long earning reports. They're a slog, but hopefully you'll bear with me. Thanks.